The offered interest rate on the top P2P lending platforms has decreased in the last couple of weeks. STG is now offering most of their projects with interest rates ranging from 7 to 9%, and one of the top P2P marketplaces in Europe, Peerberry, has also adjusted their rates ranging from 8 to 11%. 2 years ago, you could have earned on average almost 3% more for your money than in 2022. In today's video, we will look at the main reasons why the rates have dropped, and we will also introduce 5 strategies that will help you to increase your returns. Welcome back to another video. My name is Jakub from P2P Empire, and if you are looking to become more educated in P2P lending, consider subscribing and hit that notification button to not miss out on future videos. So if you have been invested in P2P loans for a while, you might ask yourself whether the risk and return is still worth it today, since the average interest rates for the currently available loans on most of the popular platforms have dropped quite a bit in the last few months. To answer this question, we need to look at some of the core reasons why the rates have dropped. In my opinion, the main reason why the interest rates decreased is that lenders now have access to cheaper funding sources. Many lending companies have been operating in the lending industry for a couple of years now, and they have proven their business model, which means that they now have access to more affordable capital. Many bigger lending groups are now listing bonds on stock exchanges or onboard institutional investors to help fund its loan book. Successful lenders are also using their retained profits and fund its outstanding portfolio from its own balance sheet, which is obviously much cheaper than paying more than 10% interest to retail investors. At the end of the day, lenders are for-profit organizations, which means that they are interested in decreasing the costs where possible. Another reason why the rates have dropped is that there is a higher demand for loans from established lending companies. What I mean here is that the demand from investors for investment opportunities is higher than the supply of loans, which puts the lender in a comfortable position. You should understand that the more established lenders are typically more trustworthy, which reduces the risks that they will run away with your money. And if there is enough investors to fund the loans for a lower interest rate, there is no reason to increase it. Together with inflation and taxes, the decrease of interest rates is certainly not a great message for investors who are chasing the highest returns. The current inflation rate in the euro area is at 5%, which means that you are losing 5% of the buying power on a yearly basis. On top of that, depending on your tax residency, you are required to pay taxes from your earnings, and in certain countries it can be up to 45%. If you invest for a 7% interest and you deduct taxes and inflation, you might as well end up with 1 or 2% net profit per year, which might not be worth it considering that you take on the full default risk as well. On the other hand, we have to realize that we all start at negative 5% per year, and in order to at least preserve our financial wealth, we have to invest somewhere. If you don't mind volatility and you can cope with unexpected returns or losses, investing in crypto or stocks might be worth it for you, given the fact that you have educated yourself about the risks. If you're looking for a less volatile investment, P2P lending is a good fit for you, as it helps you to preserve your wealth, considering you don't do anything silly like investing in dodgy platforms, which can lead to the total loss of your money. Now that we have established some context, let's have a look at how you can increase your returns this year to not only break even but also make some profit. We have come up with 5 strategies that might be worth considering depending on your risk tolerance and time commitment. The first strategy is lender picking on smaller or less known platforms. What you're doing here is to basically look into less popular platforms that have been on the market for a while but haven't really attracted so many investors. Some of the platforms offer attractive returns for loans listed on various markets, and this table you can see some of the possible investment opportunities with the highest rates in the industry. It's worth noting that all your investments are in euro, so you don't bear the foreign exchange risk. While the availability of those loans with the highest interest rate might decrease in the future, there are still plenty of loans available as we are recording this video. If you're not a big fan of investing in consumer loans, you can also go for some of the business loans on Reinvest24 or Heavy Finance. Most of the loans are backed by collateral, and if you're ready to commit more capital, you can often get yourself the highest offered interest rate. Smaller crowdfunding platforms typically offer better deals in newly launched markets to attract investors and increase the funding speed. This might, however, change as they get more established within a region. The second strategy I want to mention is investing in foreign currencies. Most of the platforms offer investments in euro, which means that you will also receive your interest in euro. There are, however, a few exceptions where you can also invest in other currencies. The most popular ones are the Russian ruble, Kazakhstani tenge, and the Bulgarian leva. Here are some of the high-yielding loans in which you can currently invest in foreign currencies. When investing in foreign currencies, you should keep the fluctuation in the value of the particular currency in mind. In this table, you can see how much you would have gained if you would invest €1,000 into a foreign currency in the beginning of 2021 and let it sit for 1 year. As you can see, in certain currencies, you would increase your return, but it's not always the case. If you would invest in loans in Turkish lira, you would have lost 40% of the value in this 1 year period. Investing in foreign currencies adds another risk level to your portfolio, which is something to consider as well. If you decide to give it a go and invest in a foreign currency, make sure to check the economical situation and the volatility of its local currency and risk scores of particular lenders that are being provided by some of the P2P marketplaces. The first strategy that will help you to increase your returns is to invest on the secondary market. Most of the P2P lending platforms offer you the chance to sell and buy loans also from other investors. This means that if someone wants to sell their loans, you can buy it off, often at a discounted price. Just navigate to the secondary market and filter out loans that are offered for sale at a discount. For example, here on EUVO secondary market, you can purchase Quick loans with a 10% discount, which can really increase your returns as long as the loan is repaid. Keep in mind that there are two main reasons why people sell loans on the secondary market. One being the need for liquidity, and the second one being the fear that the loan will default. You should always try to understand which reason is more applicable. The fourth strategy that will help you increase the returns are loyalty bonuses. There are a few platforms on the market that give you up to 2% bonus if you invest a certain amount of money. You can get a 1% bonus on Peerberry when investing €40,000. The same is valid for Robocash, but there is a lower threshold of just 25k. EUVO offers cash bonuses for Gold Club members with a portfolio amount of €25,000. And Swapper offers 2% for investments over 5k. Obviously, this is one way to get a high interest rate. It should, however, not be your primary reason why to invest more money. Apart from a higher interest rate, loyal investors get to enjoy more perks, such as a higher priority when using auto invest, which can be quite handy, especially if there is a lot of cash drag. The last strategy that I have for you are sign-up bonuses. The difference between a sign-up bonus and a loyalty bonus is that a sign-up bonus pays out the reward just once, and usually it's after 30 or 90 days from your registration. Typically, the sign-up bonus is calculated from your investment amount. Some platforms offer bonuses between 0.5 and 1% for newly registered investors. We have actually a whole section about bonuses on our website p2pempire.com, so if you want to grab one yourself, you know where to go. So those have been kind of the main strategies on how to increase your return on investment in 2022. Keep in mind though that sometimes the higher rewards are linked to higher risk levels. If you decide to invest in higher yielding loans, conduct your own due diligence and risk assessment and try to evaluate whether the offered yield is worth it. If you find this video helpful, give it a like. Thanks for watching, and I will catch you in the next one.